Hello, I am Maria Municchi and I'm the Fund Manager of the M&G Sustainable Multi-Asset Strategies. I'm delighted to talk to you today about investing today for tomorrow's challenges. Our world is facing a number of environmental and social challenges. All of those have been brought to the fore through the recent pandemic that we lived through, which really highlighted the fragility of our system and of our environment as well as social risks. However, the last 12 to 18 months also demonstrated the ability of our society to transform quickly when we need to. And I think this is particularly important when we look at some of those environmental and social challenges in detail, because many of those are really exacerbated by the way our economic systems are run. Economic systems that are often based on a linear model of operations and that are often extractive and wasteful. And we have several examples of those, some of those here being illustrated by Ellen MacArthur Foundation, and areas that are becoming really more and more evident to the public as we discuss them and find more details about them. An example about this is plastics. We produce an enormous amount of plastic, about 359 million tons a year, of which roughly 50% is single-use plastic. Most of it goes straight to the landfill, doesn't get recycled. This creates an economic waste of about $120 billion a year, eating our carbon budget and also hampering our ecosystems and fisheries, which we actually do depend on. Another area that's been brought to the fore is around fashion and textiles, another huge industry where we produce about 98 million tons of clothing every year, and 60% of this roughly goes to landfill and gets wasted within 1 year. Very, very small part of it get recycled, less than 1%, and this creates a waste of about $500 billion a year. Again, eating on our carbon budget, but also creating waste that goes into our oceans and affect the ecosystems we depend on. Finally, food and agriculture is another area that is extremely key and important for our sustenance as human beings, but also that is managed very inefficiently. We produce a large amount of tons of food every year, around 82 million tons, but of these, almost a third doesn't even reach our tables and goes to waste, creating an enormous loss in terms of economic value, in terms of carbon budget again, and also very often on our health and well-being. So when we look at those frameworks, what I think is interesting is that we can look at those challenges in a pragmatic sense and trying to understand what some of the solutions might be to address those challenges that we are facing today. And one of the solutions that we are been looking into, in particular from an economic standpoint, is really this transformation from a linear economy into a circular economy. Business models that historically have been relying on sourcing the goods, transforming and consuming them and then going to waste, need to transform into more efficient systems and modus operandi like the one of circular economy, where resources are used and reused and where waste is minimized. And this is not only benefiting our world from an environmental and social standpoint, but could also bring some very important economic benefits to our society and the companies we invest in. So this is why it becomes very interesting from a financial and investment standpoint, being able to integrate sustainability challenges and opportunities within an investment portfolio. So given these challenges and opportunities, we think that today is possible to embed sustainability within investment portfolios while creating some attractive financial opportunities. And this is where we try to achieve our dual objective of a sustainability outcome together with a return and risk outcome that is suitable for the client. One aspect that we feel is extremely important is how we build a sustainability framework that is robust and transparent. Sustainability encompasses many different ways of investing and is a very wide-ranging theme. And therefore, it's very important to have a well-defined approach and a measurable one. The way we run our portfolios is we have a core set of investment into positive impact assets. Assets that not only deliver financial returns, but they also provide an outcome that is linked to environmental or social activities. We also want to manage the portfolio tactically, so the remainder of the portfolio is what really does the work in terms of strategic and tactical asset allocation. By using investment that have a positive ESG tilt or that have a good ESG quality and are companies that are well positioned to face some of the challenges that the transition that we might face will bring. And finally, we want the entirety of the portfolios to have a climate focus, because climate is a huge transformation that we are facing ahead of us and that will have some very, very important financial implications which we need to be very well aware of, and we need to position our portfolios for it. Finally, what we have launched recently is a sustainable multi-asset range of funds. Funds that are multi-asset, that have a volatility target, but that embrace sustainability through the framework that I just described. This is a set of 3 funds, a cautious, a balanced, and a growth fund. They have a dual set of objectives, a financial objectives that rest upon the need to maintain a specific level of volatility over a 5-year rolling, and a non-financial objective, which is about investing for sustainability and in companies that have a good ESG quality. There are different ways we measure this, by looking at the overall ESG rating of the portfolio, as well as the overall carbon intensity, and also looking in the specific at what are the companies that are delivering positive impact for the portfolio and how much of the portfolio is invested in those.
Maria, how reliant are you on third parties to make judgments on ESG credentials? And how much qualitative work complements this initial screening?
I think ESG data providers have evolved significantly in the last few years. We've seen a consolidation of players, we've seen improvements on the data availability, and I do believe they are an important part of sustainable investing, and we use them mainly for screening. So the first part of our investable universe is defined through a screening, and the screening relies on third-party data. Third-party data is useful in terms of the coverage being very, very broad, but also the variety of asset classes that are covered. It also provides some consistency with the rest of the market in terms of what the client expectations will be for the targets of those particular funds. However, on top of that, then we have more of a qualitative approach. We aim to identify in particular what are the key ESG issues that, for example, the third party provide. We will tend to look at them into more details and understand what the actual nature of those issues might be. And in particular, for the part of the portfolio that is dedicated to positive impact, this is where we have a lot of qualitative work that goes into understanding not only the ESG characteristics of the companies, but also looking in the specific at the quality of the investment, the intentionality of the investment, and the impact itself. So how can we measure it? How can we evolve? How can we expect this investment to contribute to these environmental and social goals over time?
How do you think about ESG investing in sovereign bonds?
ESG approach is definitely more well established in equities and corporate bonds, but as multi-asset investors, we look at sovereign bonds as well. And this is where we have done quite a lot of work to try and understand how can we think about sovereign bonds through an ESG lens. And there are different factors that come into play, governance being a key one, so how the country is run and what the level of freedom is in this country, but also social and environmental aspects are becoming more and more important. The way we apply this to our portfolios is to have an initial screening based on ESG third-party data, but also to have more of a qualitative in-depth look at what are the challenges from a social and environmental perspective and how does the country fare relatively to its peers in this respect. I think there is also often a view that emerging market sovereigns, they score less well as an ESG perspective, obviously because of the governance and the fact that they are in a way a bit behind on some of the social trends that we are observing elsewhere. But I do believe that as part of a sustainable multi-asset portfolio, they have a very important role to play, because we need the role of emerging markets, and we need a global perspective in order to be able to tackle those environmental and social challenges. And emerging market government bonds and the need to invest in these areas of the world is extremely important. So we look at them from an ESG perspective, but we're also trying to think about them from a sustainability standpoint. What can they bring to the transformations that we ought to see in the next decade or so?
As an active manager, can you talk about where and how you've engaged with corporates in this portfolio?
So engagement and active ownership is a very important part of sustainable investing. And within our portfolio, we're very keen on doing both. So we're very active voters, but also we tend to engage with the companies where we see opportunities. There are different ways of engaging with the company. It could be at an industry level, it could be at the overall company level, so in this case at M&G level, or it could be at the fund specific. And we tend to do engagement in these three different ways. For example, one company that we've engaged at the overall M&G level with has been Sainsbury, and that has been a very interesting piece of work because we have discussed with them how they tackle modern slavery across the supply chain. And the company is very well positioned in terms of some of the frameworks they've put in place, and we really wanted to understand more about that, what the challenges and opportunities are, and how can other players in this sector learn from the positive and negatives of the framework they've put in place. Within the fund, more specifically, we invest in green bonds, and we also tend to engage with companies that issue this type of bonds to try and understand better how they use the proceeds, how do they think these projects that they're financing through the green bonds really help their sustainability objectives. And recently we have been in discussion with Fibria, which is now part of the bigger group Suzano Papel, and really trying to understand how the use of proceeds of the green bonds is influencing their supply chain. So some of the proceeds are used for sustainable forestry, and they use this also across the supply chain. So when they purchase wood, they want to make sure that it's sustainably produced. And this not only enhances the sustainable characteristic of the company itself, but also of the whole supply chain, which we think is a very interesting way of approaching this.
What sort of reporting can an investor expect from the team if they're interested in these funds?
I think reporting for sustainable strategies is extremely important. There is more and more data available out there from third party or from specific investors. However, the data can be very varied and doesn't always tell the full picture. So I think the more detail you're able to provide to investors, the better they will be able to understand what they're actually investing in. As part of our multi-asset sustainable funds, we produce regular monthly data on the overall characteristics of the fund, so being the rating or the ESG rating or the carbon intensity or the percentage of the portfolios invested in positive impact assets. But we also produce a much more detailed annual report where we really aim to give a much more detailed set of information about the ESG credentials of the portfolio, the climate attributes, but also more in the specific, the positive impact. So we really want to give full visibility of each of the holdings that are in this part of the portfolio, what we're aiming to achieve through this type of investments, not only from a financial standpoint, of course, but also from an environmental and social standpoint. So reporting, I think, is absolutely key, and transparency. There is very different ways today to do sustainable investing. It's a very broad spectrum, and so I think being transparent really helps investors understanding what they're buying.
Does the fund invest in other funds, or is it directly invested?
So the M&G sustainable multi-asset strategies are directly invested. We have very limited exposure to third-party funds or collective, and the vast majority of our holdings are direct. So that means direct equities, direct corporate bonds, sovereign bonds, and, for example, infrastructure. And these enable us to have much more direct control on those holdings and better understandings of their own characteristics, but also to be more tactical when we can change the shape of the portfolio. So we don't have to rely on an underlying fund manager changing his position or us changing the funds that we have within the portfolio. We simply shift the holdings that we have directly, which tend to be very liquid and that are very, very easy to trade at the portfolio level. The area where we tend to not trade too much is the positive impact exposure of the portfolio. Again, direct holdings. But in this part of the portfolio, we want to be invested for the long term because this is where we expect environmental and social outcomes to be delivered more significantly.
What excites you most about this area of sustainable finance?
I think sustainable finance is a very interesting place to be today. First of all, because we observe some of these key environmental and social challenges, but also because we're starting to see the opportunities to solve some of those challenges. And this is very exciting from a sustainability perspective, but also from a financial perspective. And also we can see how parts of the financial markets are quickly adapting to the need for solving for these challenges, creating new type of investment, new issuance in certain areas of the market, innovation. And this is certainly something that is extremely exciting, both from a sustainability standpoint, because we can see some concrete solutions being brought forward, but also from a financial standpoint, being able to provide our clients with this type of exposures. I think today it's extremely interesting.
Do you think the sustainable agendas brought forward by different countries today influences the macro investment landscape?
Absolutely. I think it's something that investors today have to be extremely aware of. We're seeing some significant changes, especially for what concerns climate. We've seen last year China and now more recently the US really refocusing on the climate agenda. We're seeing the recent spending proposal from the Biden administration focusing not only on climate but also on the social areas. And so I think this is extremely important from an investment standpoint to really be very aware of where these policies are going. And the fact that they encompass both fiscal and monetary policy makes them particularly important for when we look at asset classes and what does it mean for equities versus corporate bonds versus sovereign, especially in a multi-asset portfolio. So I think investors today really have to be conscious about what some of the climate regulation and future of that could be, not in the immediate next 3 months, but probably in the next 3 years or so, and what could be some of those consequences. And I think today we start to have more tools also available from a portfolio construction standpoint that enable us to understand what the impact of some of those policy could be on the assets we invest in and on our portfolios. And again, we tend to very much focus on the downsides and on the risks, but also with that comes a lot of opportunities in different sectors, which are probably not the same sectors that have won for the past 10 or 15 years, but the new sectors, innovative sectors that can help this transformation that our world very strongly needs and that politicians, but also the wider communities are becoming more and more aware of.